From the trading floor of the NYMEX, I'm Jill Malandrino for The Street. And Zuki, we have a lot to cover this week because the commodity complex was very volatile into the Fed and after.
Well, certainly it's a buy the rumor, sell the fact kind of situation. They finally took patience out of the communique, and but then she tempered some of those words later on. So the dollar finally gave back some of its lofty gains. That put a little wind in the sails of the entire commodity complex. Certainly gold had been $15 to $18 higher, cleared out some of that resistance above 1160. This morning we're seeing some more euro strength or dollar weakness, which has put gold back almost to the highs of the move, 1177, 1178, and copper and crude oil following the euros higher also.
It feels like with gold, that $1,200 magic number, it's been jockeying around there in that $50 range, either to the up or downside. Do you expect more of that?
Yeah, the volatility in gold is what I thought we'd see this year. The range has been a little bit more than I expected. However, we are seeing, because of the dollar and what people are doing, central banks around the world, that is creating the volatility. To the upside now, maybe 1,200, maybe 1,225, but still, we're not out of the woods, and unless she actually does make a move, we could see gold back down to 1,150 and test the downside again.
Does the central bank movement impact copper at all?
Copper has had its own special little issues. The supply and demand certainly does hold firm for copper, China being the driver of demand. The first quarter is usually slow, so we did reach our low point, especially with the strength of the dollar impacting all commodities. We do have a strike that started in Grasberg, one of the largest mines in the world, which started on Monday. It didn't seem to affect price until the FOMC meeting, and we definitely took out some resistance lately, and copper looks like it could be due for a little pop. The supply constraints with the strike, some mine issues going into the second quarter, and some ramping up in consumer demand in the second quarter could see copper to test the $2.90 to $3 resistance area.
Let's wrap it up with crude because it broke through some really key support levels this week, and then following the FOMC, it got a bit up as well.
Well, the supply demand for crude is completely different than it is for copper. We saw the figures come out this week, expectations of 3 million plus, and it comes out another 9 million build this week. And every place across the board looking for storage. Contango's bigger than we've ever seen month to month, really showing that the market is very oversupplied. So the dollar, where it does help force some of the shorts out, could certainly be temporary, and the supply and demand issues could push crude oil back to the lows.
Because nothing fundamentally has changed at all.
No.
If not, has gotten worse.
Right. If anything, as the weeks go by and the storage capacity gets filled, once that's max in the United States, which could be another 2 months or so, then they're going to have to sell open market stuff, and then you could really see a 3 in front of it. And a lot of people have been saying 2s, but that usually happens when people are overzealous in their predictions.
Okay, thanks very much, Suki. From the trading floor of the NYMEX, I'm Jill Malandrino for The Street.